Welcome to the Explore Real Estate Show. I am James Boslaw, your Fredericksburg area realtor and vacation rental investor. And this show is all about real estate in the Fredericksburg area, the Fawn Lake community, and the vacation rental space. I help people buy and sell homes because I believe that everyone should grow their wealth as they live in or own a home that they love. I also believe that everyone should feel confident when buying or selling a home, and confidence comes when you are well educated and informed. And that's what this show is all about. Enjoy the show. Hey everyone, welcome to the Explore Real Estate Show, where in today's episode, I'm going to break down the real estate stats in the Fredericksburg area for the months of June and July. If you follow this show, you know that normally what I do is I break down the stats for the area month by month, but due to some sickness and some family travel, I'm actually going to be combining June and July stats in this episode, which gives us even more data to look at and just really get a feel for what's going on in the Fredericksburg area. So let's dive right into the key stats and key numbers that I'm tracking. First and foremost, we're going to look at the month of June of this year, comparing it to the month of June in last year. And when we do that, the sold dollar volume is down 12%. So there's just less homes being sold. That is something we've seen all year, so no surprise there. The average sold price is up from June of last year, 4.5%. So that's good. That's about normal appreciation. That's not the crazy highs that we were experiencing years ago, and it's definitely not low. That's about average appreciation, what we would expect in a normal market. So things are normalizing in regards to the average sale price from June to June, this year to last. The median sold price is up 2%. So we're seeing more of the same, average appreciation. The overall units sold, the number of units sold is down 16%. So going along with the 12% less sold in total sales volume, the actual units sold is down 16%. But here's the last stat, and I think it's one that's also interesting to follow, and that's that the average days on market is up by 63% this June compared to last June. Now, that might sound like a lot, but what that really means is that last year in June, the average days on market for a home before going under contract was 11 days. This year, the average days where a house is on the market before going under contract is 18. So that jump from 11 days to 18 days doesn't sound as bad as a 63% jump that we see as far as the average days on market. Now, that was for the month of June. So let's take a look at the month of July of this year. And when we compare it to July of last year, when we do that, the sold dollar volume is down 21%. We'll attribute that to the rising interest rates yet again. The average sales price is actually down 0.25% when you look at the average this August compared to August of last year. So once again, the rising interest rates are having an impact not just on the overall sold dollar volume, but also on the average sales price. Now, when you look at the median sales price is actually up 5.5% from last July. So we're getting some conflicting evidence there based on the average sales price and the median sales price. When you equal those two out, we're looking at somewhere around 2.5% up from last year when you look at July compared to July of last year. And the average days on market is up about 17%. So last year in July, it took about 18 days for a house to go under market. This year in July, it would take about 21 days for the house to go under contract. Now, that's the stats for June and July of this year. Now what we're going to do is we're going to take a look at the stats year to date. That would be January of 2023 through July of 2023. That's year to date of 2023. And we do that, we're seeing that these stats are following right along with what we've been saying. The sold dollar volume is down about 24% from last year's year to date. The average sales price is up about 2%. The median sales price is up about 3%. So once again, we are normalizing as far as our appreciation levels. The unit sold is down about 27%. Less homes are selling, more of the same. And the average days on market year to date this year, it's up 75%. So year to date, last year on average, it would take about 16 days for a house to go under contract. This year, it's taking about 28. So we're seeing the stats show us more and more of the same. We're seeing some consistency this year with our stats. Nothing has changed. The amount of homes being sold is down. the sales value of the homes are up slightly, which is great because we're seeing normalized appreciation. And the average days on market is a little bit higher this year than last year. Nothing crazy, but it does take a little bit longer to sell a home this year than it does last year. So once again, what do we do with all of these stats? If you're a buyer or a seller, what does this mean? Well, this is what it means. If you're a seller, your home values are still great. They're still solid. They're going up. So you can exhale. Your value of your home is going up. But if you were looking to sell, what you do need to realize is that it is going to take maybe just a little bit longer to sell your house than it did last year. Now, what does it mean if you're a buyer? Well, if you're a buyer, what it means is that there's opportunity out there. There are homes that are on the market a little bit longer than they were last year. Because of the interest rates being higher, there's fewer buyers in the market, which means that you're competing against fewer people. So if you find a home that you like, there might be some wiggle room there where maybe you can get some terms that are a little bit more favorable for you. But what we see, generally speaking, in the market is that a lot of buyers are just waiting and buying time for those interest rates to go down. Now, I've spoken to this a lot. I did an episode called Interest Rate Dilemma where I talked about my thoughts regarding the bottleneck and the demand that's being created by everyone waiting for the interest rates to drop. Once the interest rates do drop, we are going to see a ton of buyers in the market. And I think we're going to see yet again more bidding wars. And I think we're going to see some awesome appreciation, which is great if you're a home owner. But if you're a buyer, what that means is that you're going to be competing with a lot more folks. So if you are a buyer, what I do recommend is that you keep your eyes open for a property, a home that you like that makes sense for you. And if the numbers work and it makes sense, go get that home right now. And yes, the interest rates are higher, but when the interest rates drop, you can refinance and you could be in the home that you love, in the location that you want to be in, before we hopefully see another wave of appreciation that I think will hit us sometime in 2024 or maybe even late 2023, depending on when the interest rates drop. I think that the values of our homes will go up dramatically once the interest rates drop. So that's it for our stats for the Fredericksburg area for June and July. As always, if you have any more questions or want some more expert advice on the local area, you can always contact me at my website, which is explorewithjb.com. And if you want to stay on top of all these episodes as they come out, if you are watching this on YouTube, then make sure to subscribe. If you are listening to this on podcast, make sure that you follow. And I would love for you to just stay on top of these episodes as they come out. So look forward to the next one, which will be coming out here shortly. But I hope you guys have a great day and a great week, and we'll see you on the next episode.